Side, come and look at this. What is it? Guy claims he made almost 5,000 ringgit in a month through forex trading.
5,000 ringgit in a month?
Yeah, and there are hundreds of comments saying forex trading is a great way to earn extra income.
So you are thinking of trying it?
Yes, I mean, who will not be interested, right? But there's one thing that's bothering me.
What's that?
This comment. Forex is halal, forex is haram, forex is just gambling, forex is a legitimate investment. How can the same activity have so many different options?
Actually a very good question. Before deciding something is halal or haram, we first need to understand what it is and how it works.
So what exactly is forex trading? And why do many scholars have different views about it?
Well, that's exactly what we are going to discuss today.
Forex stands for foreign exchange, which refers to the process of buying and selling different currencies in the global financial market. The main purpose for forex trading is to earn profit from changes in exchange rates between currencies, which has been reported by IOC 2007. For example, a trader may exchange Malaysian ringgit for US dollar if they expect the value of US dollar to increase. If the exchange rate rise, the trader can sell the US dollar at a higher price and make a profit. The forex market is considered the largest financial market in the world, with daily trading volumes exceeding 7 trillion US dollars, which has been reported by Bank for International Statements. Unlike stock markets, the forex market operates 24 a day, 5 days a week, allowing traders from different countries to participate at any time. There are several participants in the forex market, including central bank, commercial banks, multinational companies, investment institutions, and individual traders. So today, online trading platforms have made forex trading more accessible, allowing individuals to trade currencies using computers and smartphones. Forex transaction can generally be divided into two categories. The first is currency exchange for practical purposes, such as international trade, overseas education, and travel. So the second is speculative trading, where individuals buy and sell currencies solely to gain profit from market fluctuations. Although forex trading offers opportunities for financial gain, it also involves significant risk due to the constant changes in currency values. For this reason, it is important to understand both the financial and Islamic perspective before participating in forex trading.
Islamic finance is based on Sharia law. It teaches people to be fair, honest, and responsible when dealing with money. The goal is not only to make profit, but also to help society and avoid unfair practices. The first principle is the prohibition of riba or interest. In Islam, people cannot earn money just by lending money and charging interest. Profit should come from business, trade, or investment. The second principle is farar, which means uncertainty. In any financial transaction, all information must be clear. Both parties must know the price, terms, and conditions before making an agreement. The third principle is mazir, which means gambling. Islam does not allow people to earn money through gambling or high-risk speculation. Financial activity should be based on real business and real assets. Islamic finance also requires all investment to be halal, which means permissible according to Islamic law. Therefore, Islamic financial institutions do not invest in business related to gambling, alcohol, or other prohibited activities. In conclusion, Islamic financial transactions are based on fairness, honesty, risk sharing, and ethical investment. They also avoid riba, horror, and mazir. This principle help create a financial system that is fair and beneficial to society.
Have you ever wondered whether making money through forex trading is actually permissible in Islam? Forex or foreign exchange trading involves the buying and selling different currencies. While Islam allows currency exchange, not every form of forex trading is considered halal. A forex transaction can be halal when the exchange takes place immediately. In other words, it is spot basis. Ownership is transferred to both parties, and the transaction is free from riba or interest. For example, exchanging Malaysian ringgit for US dollar before travelling is generally permissible because it serves a genuine purpose and follows Sharia requirement. However, many online forex trading platforms contain elements that make them haram. One major concern is riba, or we call interest, such as overnight swap charges imposed by brokers. Islam strictly prohibits any form of interest in financial transactions. Another issue is leverage, where traders borrow money to increase their trading power. This raises concern regarding ownership and may involve interest-based arrangement. In addition, many traders participate in forex solely to speculate on price movements and earn quick profits. This excessive uncertainty and risk can resemble gambling, maisir, which also prohibited in Islam. Therefore, although currency exchange itself is permissible, most retail online forex trading is generally considered non-Sharia compliant because it contains elements of riba, uncertainty, and speculation. In conclusion, Muslims should ensure that any financial activity follows Islamic principles and promote fairness, transparency, and ethical wealth creation.
Today, we are breaking down a highly debated topic in modern Islamic finance. Is retail forex trading halal or haram? To understand the ruling, we have to look at a specific decree of renowned Sharia scholars and legal counsels. To understand why scholars rule the way they do, we have to look at the core philosophy of Islamic economy. In Sharia, money is strictly a medium of exchange and measure of value. It is not a commodity meant to be bought and sold just to generate more money. For a currency trade to be valid, it must follow the strict rules of buy or sell. This requires the transaction to be spot exchange with immediate hand-to-hand delivery, known as COP. Any delay in settlement or any element of interest instantly invalidate the contract. Because of this parameter, the absolute majority of contemporary scholars has declared that retail online forex trading is permissible. A leading authority on this view is Mufti Taqi Usmani, the influential chairman of the International Sharia Board for Islamic Financial Institutions. He argues that converting money into tradable commodity purely for profit-seeking distort the global financial system. This stand is backed by majority institutional fatwa, including the International Islamic Fiqh Academy and the National Fatwa Council of Malaysia. They highlight three critical flaws, which is the first one, leverage. Borrowing from a broker act as a loan that benefit the broker through less triggering riba or interest. The second one, lack of possession. Retail traders never take actual or constructive delivery of the currency. Then the last one, speculations. Trading on tiny price movement mimic gambling structures, violating rules against excessive uncertainty. However, there's a conditional minority view held by some contemporary Islamic financial experts, such as Dr. Muhammad Daud Bakar, a prominent global Sharia scholar who has chaired various banking advisory councils. This scholar suggests that currency trading can be permissible, but only if you completely strip away conventional trading mechanic. To be Sharia compliant, a trader must meet three strict conditions, which is the first one, they must use a 100% swap-free account to eliminate overnight interest. The second one, they must trade entirely without leverage, using only their actual unborrowed capital. And the last one, they must avoid short selling, ensuring the trade is executed on a pure spot basis.
Okay, now, after understanding the halal and haram aspects of forex trading, it is also important to examine current practices and the rulings issued by Islamic authorities. Today, most retail forex trading is conducted through online platforms that allow individuals to trade currencies using features such as leverage, margin accounts, and overnight positions. These platforms have made forex trading more accessible to the public. However, they have also raised concerns regarding compliance with Sharia principles. One of the main concerns is that many online forex transactions do not involve the actual ownership or immediate exchange of currencies. In addition, the use of leverage and overnight swap charges may introduce elements of riba, while excessive speculation may lead to maisir or gambling. Some transactions may also involve gharar, which refers to excessive uncertainty. Due to this concern, several Islamic authorities have issued rulings on forex trading. In Malaysia, the National Fatwa Council decided that individual spot forex trading through online platform is generally not permissible. The ruling was based on the presence of the uncertainty, speculation, and issues related to ownership and possession of currencies. However, scholars generally agree that genuine currency exchange for legitimate purposes such as international trade, travel, or business transactions remain permissible when it fulfills the conditions of Bai' Musarraf. In conclusion, current forex practices should be carefully evaluated from both a financial and Sharia perspective. Muslims should seek knowledge and ensure that any financial activity they engage in complies with Islamic principles and ethical standards.
I realized that the issue is much more complex than I thought.
How so?
I thought the forex trading was either completely halal or completely haram. Now, I understand that the ruling depends on how the transaction is conducted.
Exactly. The key issue is whether the trading activities complies with Sharia principle and avoid prohibited elements such as riba, gharar, and maisir.
Before participating in any investment opportunity, I should first understand how it works and whether it complies with Islamic principles.
That's right. As Muslims, we should not only focus on potential profit, we should ensure that our financial activities are ethical, responsible, and Sharia compliant.
That's definitely an important lesson for all of us. I think that's all for now.